Welcome to Section 2 of PNJ Group's ASC 710 training. This is the heart of the standard, the 4 criteria that determine whether your company must record a liability for vacation, sick leave, and other compensated absences. Get these right and the rest of the standard falls into place. By the end of this section, you will be able to apply all 4 criteria that trigger a compensated absence accrual and explain what happens when any one of them fails. You will identify which criterion fails most often in practice and why. You will correctly classify vacation versus sick leave under different policy structures, and you will understand how state-level paid sick leave laws have added complexity to an analysis that used to feel straightforward. Here is the gateway question for every compensated absence. Do all 4 criteria apply? Under a ASC 710, you must accrue a liability only when every single criterion is satisfied. If even one fails, the accrual is not required, though you may still need to disclose the obligation in the notes to the financial statements. This is not a judgment call where you weigh the criteria against each other. It is a checklist. And critically, you apply the test separately to each type of absence policy. Vacation and sick leave often have different policies, and different policies get different answers. The first criterion asks, has the employee already earned this benefit? The time off must be attributable to services already rendered, not to future work the employee has not yet performed. For vacation that builds up each month an employee works, this criterion is satisfied at the moment the time is earned. For a bonus that requires an employee to still be working on December 31st, the portion covering future months is not yet earned. In practice, Criterion 1 almost always passes for standard vacation and sick leave, because employees earn those benefits by showing up to work. This is the criterion that fails most often, and when it does, no accrual is required. The benefit must either vest or accumulate. One of the two is sufficient, both is fine, but neither means you stop here. Vesting means the employee keeps the value even after leaving the company. Classic example is vacation that gets paid out at termination. Accumulating means unused time rolls forward, so vacation days left over in December become available in January. Here is what is surprising. You do not need both. Even if sick leave is forfeited on termination, if it accumulates and carries forward, Criterion 2 is satisfied, and the reverse is equally true. Once criteria 1 and 2 pass, the final 2 are typically straightforward. Criterion 3 asks whether payment is probable, and for standard vacation policies, it almost always is. Employees generally use their time off or receive a payout when they leave. Criterion 4 asks whether the amount can be reasonably estimated. If you have employee pay rates, accrual rates, and historical usage patterns, you can estimate the liability. The one nuance: you reduce the estimate for expected forfeitures, the portion of accrued balances that history shows will never be taken or paid out. Use actual historical data to set that rate. Vacation is the compensated absence most teams deal with every period, so it is worth working through the policy types. If the vacation accumulates across years and is paid out when an employee leaves, all 4 criteria are met. Accrual is always required. If vacation accumulates but is forfeited after a period, say 2 years of non-use, Criterion 2 still passes because accumulation exists. You accrue for the accumulated balance and adjust for expected forfeitures based on how much typically goes unused. But if the policy is pure use it or lose it with no carryover and no payout at termination, Criterion 2 fails. No accrual is required. Most people assume sick leave needs to be accrued. It usually does not. Here is why. Most sick leave policies in the U.S. do not pay out unused days at termination and do not allow meaningful carryover. That means Criterion 2 fails, neither vesting nor accumulating. No accrual required. But watch out for exceptions. If the company's policy explicitly pays out unused sick days on termination, or if employees can convert unused sick days into vacation, accrual is required. And as U.S. states have passed paid sick leave laws with mandatory carryover provisions, the analysis has become more complex. Some state-mandated sick leave that accumulates and carries forward now meets all four criteria. You need to look at the specific policy and the applicable state law. When any criterion fails, the accrual is off the table. But that does not mean you ignore the obligation entirely. Disclosure may still be required in the financial statement notes, depending on the nature and materiality of the benefit. The most common reason for non-accrual is criterion 2. The absence policy neither vests nor accumulates. Watch for policy changes. If a company updates its sick leave policy to allow carryover or introduce a payout on termination, the answer can flip from no accrual to required accrual overnight. Reassess at each period close and document the four criteria analysis for every absence type. This documentation is exactly what auditors ask for. The four criteria test is the engine of a ASC 710. All four must pass missed one, no accrual. The criterion that trips up most policies is criterion 2. The benefit must either vest or accumulate. Vacation almost always crosses that threshold. Sick leave usually does not. But the landscape is changing with state-paid sick leave legislation, so document your analysis for every policy type at every period close. In the next section, we get into the numbers. How do you measure the compensated absence liability once you have determined an accrual is required? Thank you for completing this section on compensated absence accrual rules. Thank you for watching. Subscribe for more training from PNJ Group.